Here are the crypto top headlines covered in this video. VeChain announces tokenized gloves in partnership with UFC. Community responds. Next, BlackRock smashes $10.5 trillion record in Q1 managed assets. Also, TradFi firms now prefer public blockchains for tokenization. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons, as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, VeChain announces tokenized gloves in partnership with UFC. Community responds. The new gloves will contain NFC chips that track fight data and provide blockchain evidence that they are genuine. According to an April 12th blog post from VeChain, gloves worn by UFC fighters will soon be tokenized and their identities tracked on the VeChain Thor network. The gloves will contain VeChain near-field communication, or NFC, chips that record fight data, proving the authenticity of each pair, the post stated. After the fight, the athletes will donate and give away their gloves, making them into collector's items. The chips inside each pair will allow a buyer to check the authenticity of the item via a VeChain Thor network smart contract. Fighters will begin wearing the gloves at UFC 300, which is scheduled for April 13th. In its post, VeChain claimed that the system will help prevent fraud in the secondary market, which is a common problem for buyers who seek to own the gloves worn during particular fights. The new items use aspects of VeChain's toolchain system, a supply chain management system that some enterprises use to track items and make sure they make it to the intended recipient. VeChain announced that an initial set of 12 exclusive gloves will be given to A-list celebrities, including Joe Rogan. UFC CEO Dana White will also be making a live presentation to announce the partnership. On VeChain's Reddit board, holders of the VeChain Thor, or VTHO, token had mixed reactions to the news. Some were excited about the new use case for the network. We're going to be minting RWA, or real-world asset, gloves as non-fungible tokens every UFC event, said Pez86. Another user, Vet Days Ahead, also saw the announcement as positive, stating gloves and merchandise tracking sound great. Hoping they do QR code scanning on TV for events that burns VeTho as well. But not everyone was impressed. Some users thought the new gloves would not burn enough VeTho from transaction fees to have any appreciable effect on the price. Hey man, that's like a whole 10 VeTho burned per year. UFC gonna topple Walmart China in usage, stated TKim91321 in a sarcastic reply to another user who had complained about the overhyped announcement. In another post, TKim91321 elaborated on their position, asking rhetorically, and this would burn how many VeTho per month? And then answering, nothing materially significant. According to CoinMarketCap data, VeThor's market cap was over $283 million as of April 12th, making it one of the top 300 cryptocurrencies in the world. In May 2022, the network's foundation had $1.2 billion in its treasury. In June of that year, the VeChain Foundation began its relationship with UFC, entering into a $100 million sponsorship deal with the Mixed Martial Arts Promotion. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, BlackRock smashes $10.5 trillion record in Q1 managed assets. BlackRock's $76 billion quarterly long-term net inflows already account for nearly 40% of its full year 2023 levels. Major Bitcoin investor BlackRock continues to build momentum, posting another successful quarter of income and managed assets. BlackRock issued its financial results for the first quarter of 2024 on April 12th, reporting a record $10.5 trillion in assets under management, or AUM, up $1.4 trillion from 2023. The company's diluted earnings per share surged from $7.9 million in Q1 2023 to $9.81 million in Q1 2024. The increase reflects higher non-operating income and a lower effective tax rate in the current quarter, the firm noted. Net income increased from $1.2 billion in Q1 2023 to roughly $1.5 billion in Q1 2024. In the report, BlackRock also mentioned that the company issued $3 billion of debt to fund a portion of the cash consideration for the planned acquisition of Global Infrastructure Partners, or GIP, an infrastructure investment fund focused on equity and selected debt investments. BlackRock previously announced an agreement to acquire GIP as part of its Q4 2023 report, targeting the creation of a new infrastructure investment platform. BlackRock's record-breaking AUM came amid the company handling $76 billion of quarterly long-term net inflows, which already accounts for nearly 40% of full-year 2023 levels. BlackRock's momentum continues to build, with accelerating client activity and line of sight into the funding of significant wealth, institutional, and Aladdin mandates, BlackRock CEO Larry Fink said. The CEO mentioned that BlackRock sees significant growth potential in infrastructure, technology, retirement, and whole portfolio solutions, adding, "Clients are turning to BlackRock to unlock the full potential of their portfolios, reflected in industry-leading total net inflows of $236 billion over the last 12 months. BlackRock is a major player in the cryptocurrency industry, operating one of the world's largest Bitcoin exchange-traded funds, the iShares Bitcoin Trust, or IBIT. As of April 10th, IBIT has accumulated 266,580 BTC, worth $18.5 billion, since it started trading in January 2024. Fink is known in the crypto community as a major Bitcoin bull and industry advocate. In March 2024, Fink reiterated that he was very bullish on the long-term success of Bitcoin in the context of the rapid growth of IBIT. IBIT is one of the fastest-growing ETF in the history of ETFs. Nothing has gained assets as fast as IBIT in the history of ETFs, the CEO stated. Our next top headline, TradFi firms now prefer public blockchains for tokenization. Celisa Morin, the head of legal at Reed Smith and a former executive at Grayscale, says traditional financial institutions will likely follow BlackRock's lead in using public blockchains. Traditional financial institutions are more keen on tokenizing assets on public blockchains than ever before, says a former Grayscale executive. Speaking with Cointelegraph, Celisa Morin, who served as vice president of platform distribution at Grayscale until mid-2023, said that a new BlackRock-led narrative among TradFi institutions could see more firms look to tokenize assets on public chains over private ones. I think we see a preference for private chains with JP Morgan's Onyx, but I do think that this was the narrative a few years back. Now I think it's very much the public blockchains. Morin is now the head of international law firm Reed Smith's crypto department, explaining it would make sense for larger traditional financial institutions to follow the lead of BlackRock, which launched its $100 million tokenized BUIDL fund on the Ethereum network on March 18th. The BUIDL fund now holds $288 million in assets per Dune Analytics data. BlackRock's move to launch a fund on Ethereum wasn't without controversy, with the asset manager's on-chain wallet quickly becoming the target of various spoofs from crypto enthusiasts. Deposits to BlackRock's public wallet included legally dubious transactions from the now OFAC-sanctioned Mixer Tornado Cash, as well as a roster of various cryptocurrencies from real-world assets, or RWA, tokenization projects, and meme coins. Despite the potential legal troubles that come with opting to tokenize assets on public blockchains, instead of using a more KYC and AML-friendly private network, Morin said many firms would likely take the lead from BlackRock. If BlackRock has made these choices, I don't know why the rest of the crew would be held back. Morin also noted that Franklin Templeton had already made the forward-thinking move to launch its tokenized money market fund on the Ethereum Layer 2 network Polygon in October last year. Franklin Templeton's 11-month-old Franklin On-Chain U.S. Government Money Fund, FOBXX, now boasts a total of $360.2 million in U.S. Treasuries. In total, $1.08 billion in U.S. Treasuries have now been tokenized across 17 products. Ethereum ETF in May unlikely. Morin was less enthusiastic about spot Ether exchange-traded funds, or ETFs, saying it is unlikely they would be approved in May. Having previously worked with the legal team in the lead-up to Grayscale launching its Bitcoin ETF, Morin agreed with recent sentiment that the lack of communication between the United States Securities and Exchange Commission between prospective fund issuers was a bad sign. Echoing the sentiments of senior Bloomberg ETF analyst Eric Balchanis, Morin said the chances of an approval by Van Eck's deadline on May 23rd grew slimmer with each day the SEC refrained from engaging in public comment. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.